The Reserve Bank of India Act, 1934 established India's central bank responsible for controlling the issue and supply of the Indian rupee. RBI is also the central regulator of the entire banking system in India. The Act contains the list of scheduled banks that come under the purview of the RBI. The RBI Act provides guidelines to formulate, implement and monitor the monetary policy and regulate and supervise India's financial system. The RBI was set up in 1935 through this Act. The central office was initially established in Kolkata, but was permanently moved to Mumbai in 1937. Initially the office was privately owned. It is fully owned by the Government of India since nationalization in 1949. The Reserve Bank's affairs are governed by a central board of directors, appointed by the Government of India. The objective of the RBI Act is to constitute the Reserve Bank of India to regulate the issuing of bank notes, keep reserves to ensure monetary stability in India and to generally operate the currency and credit system of the country to its advantage. This Act established the RBI to take over the management of the currency from the central government and to carry out the business of banking. The central government can also give directions to the bank as it may consider necessary in public interest after consultation with the RBI. The central board of the bank consists of a governor and not more than 4 deputy governors appointed by the central government, 4 directors, representing each of the 4 local boards of the RBI, 10 directors and 1 government official, all of whom are nominated by the central government. The bank is authorized to carry out transactions involving accepting money on deposits without interest from and the collection of money for the central and state governments, local authorities and banks. It can purchase, sell and re-discount bills of exchange and promissory notes. It can purchase foreign exchange from scheduled banks and sell to them. It can make advances to the central or state governments, deal in derivatives and securities, promote, establish, support or aid any financial institution, etc. It acts as a banker to the central government. The RBI has the obligation to transact government business and accept money for the account of the central government and make payments on its behalf. The bank has the right to issue banknotes in different denominations. The bank can also reissue banknotes which are torn, defaced or excessively soiled. It supplies different forms of currency and transacts in foreign exchange. The RBI keeps cash reserves of scheduled banks and publishes a consolidated statement showing the aggregate liabilities and assets of all the scheduled banks every fortnight. RBI formulates policies and issue directions to non-banking financial companies. If the bank is satisfied that it is in public interest to regulate the financial system of the country to its advantage or to prevent non-banking financial companies to operate in a manner that is detrimental to the interests of depositors, it can determine the policy and give directions to all or any of the non-banking financial companies. The central government has to transfer to the RBI rupee securities of the value of 15 crores to be allocated to the reserve fund. The RBI is required to make a contribution every year to the National Rural Credit, Long-Term Operations Fund and the National Rural Credit, Stabilization Fund to promote rural economic governance and the increased inclusion of rural areas into the formal banking system. The Act has been criticized for the amount of power it gives the central government to control the bank. Originally, the bank was envisioned as an autonomous body, but over the years, the central government has extended its influence enormously. This is because the Act itself gives the central government the authority to supersede the bank. The RBI is an extremely important institution in the working of Indian democracy. As the central bank of the country, it oversees the major economic activities and is actively involved in its economic progress and development. While the Act is a colonial legacy, the bank has a contemporary identity synonymous with India's growth. It creates the foundational principles and governing rules to direct the growth.